pit.
Right, hello everybody, welcome back. Let's have a look at Bitcoin. So, as we were saying yesterday, I mean, to be honest, more than yesterday, we've been saying it for a few weeks, the bears have control of the higher term time frames. Now they have control of the lower term time frames, and outside of that, we've got forces including Fed and obviously the recent developments in the in Ukraine, and again, you know, I was saying this on the live stream. We're doing a live stream tonight, by the way, so we've changed it. This is for Patreon members. Obviously, we're doing the live streams Tuesdays and Fridays now, so we are doing one tonight. But the last one we did was on Saturday, and somebody asked me like I was in some kind of position to answer it. Well, what I think is going to happen in the Ukraine. Now, I personally, I think it's more likely just to become a siege, and that siege can give a lot back. Sieges can give a lot back, and that's what seems to be what's happened today. So they've played a nice little clever game of being able to effectively invade without invading, if that makes sense. It's clever. I mean, he's a clever guy, Putin. I'm not saying I'm on his side, of course not, but I mean, he's clever. He's a clever guy, and what he's done today or last night, it was a clever move. And again, you can achieve a lot from a siege. Anyone who plays Total War, which is where I get most of my military strategies from, will know that you don't necessarily need to shoot anyone to take over regions. You just don't need to do it. And it would appear that Putin is probably a fan of Total War. I imagine. I'm sure he play if he was to ever play a game on the PC, it would be Total War. And what he's doing now is a clever move, basically. So, is there going to be an invasion? I don't know. Is there going to be war? I don't know. If there is, it's not going to be good for anything, unless, of course, you're trading in sort of high value commodities. Obviously, natural gas, oil, aluminium, all those sort of things. But outside of that, no, it's not going to be good for any of these sort of things. But as far as this chart's concerned, because remember we were talking about how things outside of the chart, do account for some serious moves. That's why we were able to sell around. Where was it? It was just before this major dump around here. We sold a fair portion around here. Now I've been buying back incrementally here and around here. So obviously, in retrospect, I've got one sell or buy order that's underwater. I've got one buy order that's above water. But the majority of the sell took place around this level. Not because the chart suggested a great deal other than we're downtrending, but because developments outside of the chart. And so we do have to, I suppose, pay attention to things that go on outside of the chart. And at the moment, things outside of the chart don't appear to be very rife with opportunity right now. But on the chart, what do we have? So, we were talking yesterday about how I'm pushed down to the bottom of the Bollinger Band, and this horizontal level of support, 36,000, give or take 36,700, would be a support based upon the resistance, the support. So it is a pit stop. It could be the reversal, and I'll show you something on the 4-hourly, I suppose, which could suggest that we get a decent bounce from here. But remember, the bears now have control over every single time frame, almost including the monthly. So this is something to recognize, all right? So we're having a reaction right now. This, I believe, is to do with the bullish divergence which has been brewing since we lost these zones. So since down here, we came to an oversold zone on the RSI, came down lower, higher low, lower, higher low, and so this could be just a nice bounce that we're getting, a bounce that could take us only up to 38,600. If we break above there and hold above there, we could make our way all the way back up to the 40s, really, the lower 40s, very lower 40s. Again, the bears have control over all these time frames, really, apart from, and I'll show you this now, I'll show you on the Bitstamp chart, the monthly. So this doesn't look very nice as far as any chart's concerned. The only thing we've got going for us, well, it's not the only thing. I mean, there are other things. But if we go back in history, I'll show you this. So I appreciate this chart's quite messy, but we're just focusing on the Bollinger Band here, right? Bollinger Band has been retested once again this month. Basically just now, really. So we're down here again at 36,500. That's the center of the monthly Bollinger Band. Being above here is this is the last stand for the bulls right now, and it's only in favor of the bulls by a 65% ratio. So 65% most likely to stay in this zone, meaning that this could be effectively the bottom. However, momentum is turning down in favour of bears. Monthly MACD cross that's been going on for a couple of months now. All oscillators basically turning down. And if we just go back in time, again, I'm not going to bother with the log scale, I'm just going to show you here. So this is a bubble pop here. This is 2017. We spent 1, 2, 3 months trying to hold that Bollinger Band. When it decided it couldn't hold it anymore, nuked all the way down. It was a 50% drop, alright? The 50% drop when losing it all the way down. 52% drop further. This was like the last dump before, I suppose, the ultimate buyback zone, really. And then obviously the bull market began shortly after that, and we had decent moves. And we can account for those sort of things as and when they happen. There'll be a small period of accumulation. If people want to buy dips, after a 50% drop, then best of luck to you. It would be a very smart idea if you're looking to invest into Bitcoin after a 50% drop after losing the monthly Bollinger Band, and that could be something that we'll be anticipating at this very moment as we're coming down to test it. 1, 2. I mean, the good thing about this Bollinger Band is it is facing up, so the supports are getting higher each month, but that's no way to really think about it given what we're talking about going on outside of this chart. We had this massive rally, and we did come and test it. 1, 2, 3. Again, this is early days of the bull market. We did come down below it, but this was again something that took place outside of the chart, and we were sucked straight back up and went to the moon after that. So we weren't particularly concerned about that because the bull market was basically in its infancy. The time was on our side massively, and like I say, it was a massively oversold zone. So yeah, we did close below it. In this current bull market, but generally that doesn't happen. We go back in time to the previous bull markets. Let's have a look at that. Extend this chart. Like I said, I don't want to stick it on log scale because it'll make it look all weird. So we are above the center of this Bollinger Band, all the way up. Massive big bubble pop, coming down incrementally, coming down, holding above it, and then test it. 1. We're below it at this point now, so the bears have control of the monthly. Effectively, this is the end, and what we have here is another nuke from below. So we tested it here, from there to here. That was a 61% nuke. All right, and again, this marks effectively the end of well, I suppose a bear market. Really, this is where bear markets really take hold, and we are looking at that right now. We are thinking that this could be the case with everything that's poised against us. However, we are still above it right now. But again, things aren't looking particularly good. But when we're talking about opportunities in March and in going into April, this could be what we'll be looking for, the final nuke that takes us. And again, this is a 65%, the other one was a 50%. These are all things that we have to consider at this point, because again, all time frames are controlled by bears right now, apart from the monthly, which is still ever so slightly in favour of the bulls by the matter of 65%, which is no good. So we'll think about what is actually going on here. We've got things going on outside of the chart, big things, which could have dramatic impacts on everything. We also have inflation, going crazy, and the Fed looking to try and deal with that. Now, with what's going on in Eastern Europe and what's going on with monetary policy, the idea of having a 50 basis point rate hike while there's some kind of conflict or potential conflict about to break out is unlikely. It's unlikely. It's unlikely. So when we're talking about the Fed and what they decide to do next month, 50 basis points is definitely mostly priced in, I would expect. 25 is certainly priced in. So when they decide to do whatever it is they're going to do, which is, given what's going on at the moment, unless there's some kind of major relief, which doesn't look to be the case, then a 25 basis point is going to take place. That will have an alleviating effect on all markets, but is it enough to carry it from the depths that they are currently in now, or may even go down to? I don't know. It's very difficult to say with this kind of posture on all these time frames. The good thing we've got going for us, which is only ever so slightly good, is the bullish divergence on this 4-hourly. So far from the bottom to the top, and again, this is only a 4-hourly, we've done a 3% move. I think that this has the power to take us up to potentially the 41,000, which is basically this trend line, the old CME gap, which is kind of irrelevant now, but we'll keep it in for the moment. That's the power it's got at best. But look, death cross 4-hourly, continuation of trend, things going on in Eastern Europe. all kinds of nonsense going on. Look, at the end of the day, this is the area here, not just based on this daily, but based on the bullish divergence and the monthly Bollinger Band Center, that could be the bottom. And if it's not the bottom, then it gets significantly worse after that. But like I say, you know, if you've been watching my channel, the idea is, yeah, you've seen me sort of buy these particular areas, the 40,600 zone, bought that, 35,000 zone, bought that. But the next thing would be to leave all funds available for March into April to see where we go from there. No point in trying to buy any more dips, not with everything that's going on right now. The idea would be to keep funds available for what could be absolutely epic opportunities, not just for Bitcoin, but for actual altcoins as well, because that was most likely going to reach a very significant low across the board for absolutely everything, giving you the opportunity to pretty much buy massively oversold coins. But remember, no altcoin is created equal, and some are very unequal. Some will probably not recover ever. We've seen it before last bull run. Some of these coins that are all in the top 10, top 20, they basically don't exist. There's a lot of coins that basically trade at a 24-hour trading volume, which means that they don't trade. No one wants them. Anyone who wants to sell them can't sell them because no one's buying them. They basically go to Probit, which is where they go to die effectively. And we see the Bitcoin dominance chart increasing. You know, it's in an uptrend. It's slow at the moment, but it's very likely to break out, and I would expect to move all the way up to at least this range that we're in. I'll turn this off because it is a matter of support and resistance. We could be thinking about this range continuing up to the top, down to the bottom, up to the top, down to the bottom, up to the top. And maybe, you know, see where we go from there. That's your best case scenario for a decent altcoin trade. Buying, not blindly, but buying your whatever altcoin you're most interested in at this particular level, which is 47%, give or take, for what could be an alt season. It doesn't, like I say, there's no guarantees. If that breaks, then we've got 52, which is a much stronger, longer, drawn out trend line with much more significance to it. And if that breaks and we continue up, then it would be this area here between 57 and 58% dominant. The idea is that Bitcoin, whichever way you look at it, is most likely to be the better place in the short term, as in like over the next few months. Better place, as in like not as good, it's not safe, but you will lose less. Remember, my trading strategy is all based around Bitcoin, so I trade into and out of Bitcoin, just increasing the amount of Bitcoin that I've got constantly. So it's, you know, it doesn't really matter what the Bitcoin's worth, because the end game is that Bitcoin generally continues to go up, you know, well, not forever, but it seems to want to go up over a longer period of time. So if I can create as many Bitcoins as possible through trading, that's the goal here. But that said, if we are looking at the precipice of a potential 50% dump, which, like I say, is well, we have to entertain that, because all time frames point to that, then well, they don't point to that as a guaranteed, but you know, we are literally on thin ice, very thin ice. You know, global warming is kicking in on the charts. That very thin Bollinger Band Center is the only thing that's holding us on the monthly, and if that gives up, it's only a matter of time before we do have a nuke event, and that's fine. Like I say, funds are available. I expect you to also have funds available, and if we do nuke, you know, by 50% from here, that's a very tasty Bitcoin price. Go on, let me just have a look at that monthly on this chart. Go on, let's refresh it. Let's refresh. I just want to see it, and we can measure out potential areas. And again, this will be an educated guess based on previous dumps that have taken place after we've lost the Bollinger Band Center. So we think about this. All right, where would we go from here? We lose support on the monthly Bollinger Band all the way down to a 50% dump. Where do we go? Well, we already have a trend line down there, don't we? And that's 17,800. Okay. So why is that trend line there? Let's just have a look. What's the relevance to that? 17,000. We have a major area of support and then lift off there. So it doesn't sound unlikely to imagine that we do dump all the way down to this particular level, 17,600 give or take, which would be down to this zone, and then that would be the nuke event, and that's where it would take us. So feel free to have some buy orders down here. Maybe 18,000 just to front run it ever so slightly. If we did come down there in such a dramatic way, just like previous charts have done, what happens with all these moving averages is that they also nuke, massively nuke, then they turn around, they accumulate, then they get your golden cross effectively, and then they move back up again. We go into another bull market where basically the moon gets hit once again, and whether we go 10x or 20x from these zones, we are talking about the towards the $200,000 zone and beyond. But in order to do that, from that level, we need to dump, we need to accumulate. This could take anywhere from as little as 3 months after the nuke to maybe 6 months before the uptrend begins and everything kicks in. Now, in previous, if we go back into the previous chart history, then it does turn around relatively quickly from its lows. And so if we did nuke by 50% and come down to these zones, it would be worth just buying it blindly. Do you know what I mean? Just buying it up, getting it bought, buy it up, buy it all up. Because the chances of it turning up again over time is very, very likely, almost guaranteed. And so that, as far as an investment is concerned, would be epic. The only issue you've got there is time, and like I say, I've been through a couple of bull markets now, and time is if you've got kids, I mean, time flies. But anyway, but you know what I mean. Time is your only issue. The investment would be solidified at that level, and it would be an epic one, and effectively you'd get the absolute low from a massively oversold nuke event. Which, like I say, it doesn't have to happen. We are still above that monthly. We've not given it up yet, but losing it, 50% from here. It's not unlikely. It's not an unlikely event. Are you going to short that? No way would I want to short that. Would I want to long it? Probably would. I wouldn't long it from the absolute dip, but I would long it from the turnaround point after the accumulation begins. Of course I would. I would long it. I'd stick a whole Bitcoin on a 1x leverage position, and I would leave it for an inordinate amount of time. Why the hell not? Get myself on Bybit, Coin Futures, whatever it is, whatever your preference. Very low leveraged, long-term, long position after the accumulation has taken place, usually about 2 to 3 months after the low has been formed. Anyway, I'm talking massively bearish, like it has to kick in, but the developments in Eastern Europe are bearish, definitely. I expect that the Fed are likely to be a little softer on their approach because of all of these developments. Which, for markets in itself it should have some upside, but for inflation should have some downside. Probably would have downside. This could be all part of Putin's plan. So let's not expect, but let's be prepared for the 50% dump. Like I say, I've been saying we've got to keep our funds available for March into April anyway, because regardless of what Russia do, there is positions to be taken probably around there, just based on the American economic policies that will be clarified around those zones, around that time frame. But other than that, we are potentially looking at a 50% dump at some point if things continue this way, because the chart permits that kind of move if we break down from lower than where we've already broken down from here. Now, to clear this up, the one other thing I spoke about this last month, is the ultimate crash signal, which can be generated on a weekly. So it was probably about a month ago when I entertained this idea, the prospect of the crash signal, and that would be an itchy cloud signal based on a weekly, and we don't have that yet. What we first of all need to do is close below the cloud here. We've got a red portion already, so that's stage 1 of the short signal, the big short signal. Stage 2 is this cross. Remember, we need 4 components for this to kick in. Stage 3 would be a closure of price below the cloud, which is quite close to where we are right now. Stage 4 is this Chiku span. This needs to close below the cloud as well. So we're still in the cloud at the moment. Below the cloud, its current trajectory, this current week would be a closure below 33,300. All the threes. more or less. I know. I don't know if that's a Mason's number or not. You'll have to check with Rich on the Telegram. He seems to know about all of that. So yeah, closure this week of 33,333 would generate potentially a short signal on the weekly. So that doesn't mean we can't move up before we move down. If that's a confirmed signal, it should be taken seriously, regardless of any further upside. The crash signal would be generated, but we don't have that yet. So again, squeaky bum time on both weekly and monthly, and recognizing that the bears have control over almost every single time frame outside of the monthly. Once they grab the monthly, it's a big deal. But opportunities lie in that. There's only so far bears are able to take it, and a 50% dump from that from giving up that Bollinger Band center historically has happened. 50%, 65%. So I mean, if you look back in time, the previous bear market was a 50% after it closed below the monthly Bollinger Band. The one before that was 65%. This is largely to do with a market cap, and the market cap being bigger each time. So maybe this time around it wouldn't be a 50%. Maybe it'd be a 40% from that giving it up. Diminishing lows each time, diminishing returns for bears, as it has been diminishing returns for bulls. But yeah, a big dump would incur definitely if we lost that monthly. No, not definitely. Nothing is for certain. But history shows Bollinger Band rules apply, and so would the Ichimoku cloud. Everything would point to a much bigger dump. Yeah, from that particular level. So and we'll just measure that from the top to the bottom. So we're just thinking give or take 18,000, aren't we? 75% retracement. That sounds about right when you think about diminishing returns up and down. Previous bear market was about 85. I think in the past it was about 90. So yeah, we'll be looking for a 75% retracement from the absolute top to the absolute bottom, which give or take would be about between 17 and 18. Yeah, we'll leave it with you there. So nice way to wake up in the morning with the potential of losing absolutely everything, but yeah. There is opportunity. Opportunity lies within these dumps if and when they do happen. So, eyes peeled, ears to the ground. Let's see where the next month and the next couple of months take us. Either way, we'll be ready to pounce. I'm not interested in shorting, but I certainly would be interested in longing. Yeah, no more incremental buys would be taking place for me on the way down. Not with things that are governing this chart outside forces, but certainly I would be thinking of this zone here as the major one, as the major bottoming area where we could effectively accumulate from and then go back up and continue with the bull run, which might last another 2 to 3 years. Opportunities though for anyone who wants to buy dips in pretty much anything blindly if we get that nuke event. Not anything, obviously. Don't go buying anything. Some altcoins will never recover, but some will. Just drawing now. Right, thanks for watching. Hope you have a nice day. Take it easy.